Hey everyone, welcome. We just got the closing bell for Wednesday, May 22nd, and you can see that report, that FOMC minutes did give us the volatility that we thought it would, but it didn't actually ultimately give us a lot of directionality. It did go down. That's exactly what I was talking about in terms of the algorithms. The algorithms apparently did not take into account the previous speeches by members of the Fed, and they're looking only at a comparison between the previous minutes and the current Fed minutes. And so because of that, we saw that big sell-off in the S&P 500 where we actually made a new low right here, a low for the week, and we almost matched the low of the last week as well. So we definitely got price movement and volatility, but by the end of our session, we traded all the way back up to the VWAP twice. Hit the VWAP, came back down, and then traded back up to the VWAP at the close. So ultimately, we didn't move that much. You can see that we're down 0.3%. Yesterday, we were up 0.25%. So that's within range. So we would still call this sideways choppy movement. We just got a larger range during the day than what we've gotten in the past few days or the past week or so. So everything that I said before looks like it's applying. We have NVIDIA coming up. There's not going to be a lot of big bets before NVIDIA earnings, and then we have the holiday weekend coming up. So we're really still going to expect this to chop sideways over the next couple of days. We just might have a little bit of heightened volatility today because of those FOMC minutes, tomorrow because of the NVIDIA earnings that are coming out after market today. So anytime now, actually, probably in the next 15 or 20 minutes might actually happen while we're recording this video. So in any case, we're just chopping sideways. We did get a directional movement after those FOMC minutes. Ultimately, in the grand scheme of things, on a daily basis, on a weekly basis, on a monthly basis, it didn't really change anything. We're just chopping sideways. So until we get volume back into this market, so today, again, we've been at 50% the last all week we've been at 50% volume or less. So until we get that volume back, it's very unlikely that we're going to get a reliable directionality. The risk is that if we have a low volume and a sudden spike in volatility because of, for example, FOMC minutes or the NVIDIA earnings, then we could gap and we can move very choppy gap upwards. Now, since that didn't happen for the FOMC meeting, it's probably not going to happen because of NVIDIA earnings. Even if they miss by a huge amount, we're not going to expect a huge gap either up or down. If anything, we might hit the upper range of the S&P 500 that we've had, or maybe a little above it, or a little below this lower range that we've had over the past week. So we're not talking about huge movement. That's kind of off the table now that we've seen the market reaction to the FOMC minutes. And it does look like everyone's waiting to deploy their capital. And are we going to deploy a huge amount of capital right before a holiday weekend? Probably not. Are we going to deploy capital after we have a clear direction on NVIDIA? Yes. So it's going to be not a huge amount of capital there. We can expect volume to come back tomorrow after NVIDIA, just not a huge amount because of that holiday weekend that is coming. So what does that mean for us? Well, for today, this was the last session to get neutral. So hopefully you got neutral and the market is neutral. And we're going to go and see what NVIDIA does if that sends us in one direction or another. So that means tomorrow you can start deciding on your direction and see if you want to switch over to a slightly bullish or slightly bearish position. For now, though, it's neutral. And if you're making all of your trades and your decisions after markets, we've really got to wait until Thursday after market. We can't make that decision today because one, the markets are closed, and two, NVIDIA hasn't reported quite yet. So we could wait for that NVIDIA to come out and then make a decision, say in an hour or so. and try to position yourself for tomorrow morning, but more likely than not, you're still going to want to wait for the official open and one more session to pass before you make that decision if you're only making decisions after markets. And then if you do that, well, it's already Friday before a holiday weekend, and so you might as well wait to the end of the week. So unless you have a very clear indication of where NVIDIA is going to go and how that's going to influence the market, then there's going to be very difficult to make a change to your portfolio allocations before Tuesday because Monday is a holiday. So most likely we're going to just look at this and stay neutral all the way until next week. But if we do get to see what happens with NVIDIA, then we will maybe be able to pick a direction. So it looks like NVIDIA is moving up after market, but we haven't hit that earnings event yet. So this is just in anticipation of the earnings report. If we look at VIX, VIX hit a very low point yesterday, and today we got some volatility. It did spike up in association with that FOMC report, and then it came right back down. So are we at elevated levels? No, we closed at 12.23. However, a VIX hedge could be a good idea. If you have a lot of exposure, if you have a lot of, even if they're non-directional bets, if you have off-sized reward or risk ratios. So I'm non-directional if I have an iron condor and I say, hey, it doesn't matter if it goes up or down. But if it moves way out of range and you lose 5 or 6 or 8 times as much as you might have gained if it didn't stay range, then a VIX hedge probably would have been a very good idea. And tomorrow morning might be too late because NVIDIA is already reporting, but a VIX hedge for some popping up to 15, 16, 17, 18, that could have been a good idea. And I put one on during the session today, but I didn't think of it until during the session today. So I didn't mention it in any previous reports or previous recordings. So just so you know, for future reference, that is something that can be done. And then TLT, that we're just not getting it. These bond traders just are not getting it. They must think something else can go on and happen with these rates because the Fed minutes said, progress towards 2% inflation is stalled. We're having to hold steady. We had the CEO of Goldman Sachs come out and say, hey, these rate cuts, they're not going to happen. And then this market just isn't getting it. So this is a blend, 20-year ETF, 20-year plus. So this is on the longer end. The Fed has an immediate effect on the short end. So the shorter, like overnight rate, and then the monthly rate, and all of this is what gets affected by the Fed funds rate. So we should look at a 2-year. See if there's a 2-year Treasury. 1 to 3 year Treasury. So let's see what happened there. Down, just not even down that much, though. It's still hanging on here. So this bond market really isn't getting the memo for whatever reason. Let's take a look at our probabilities. So we've got June at 4%. It really should be very close to 0. It should be under 1% for sure. And then July, we've got it still at about 20%, which is, it should be probably well under 10%, probably under 5%. And then we've got September at 60%. So there's still a lot of irrationality in the bond market. We've been talking about how at some point this July is probably going to, well, either they're right and I'm wrong, or what I'm saying is right and they're wrong. So this will spike up towards 100% or 0% by July 31st. What we heard Bostic say and what we heard Waller say over yesterday in their speeches was that they need several more data points before they can decide on changing a rate. that means I can't hike, or I'm not going to support a hike, and I'm not going to support a cut until I have several more data points. Several is at least 3 to me. For any real or good analyst, it should mean at least 3 data points. And these data points, they only come out once per month. So if I'm sitting here in May and I need 3 more data points, I need June, I need July, I need August. The earliest I could possibly consider cutting or increasing is September. So this July, it should be pretty close to 0. This probability should be close to 0, because what we're saying is it's got to be unchanged until we have enough data. And this is what represents unchanged right here. So this should collapse to 0, and our TLT should continue to move downwards. This is just irrational, completely irrational at this point. So it really should be coming down. So if you wanted to play on this, you could go 1% extrinsic value, or you could choose a expiration beyond, July 31st. So you're probably talking about an August or September expiration. If you did a September expiration, you've got a buffer, you have a time decay buffer more so than you do in the August expiration, because August would be there would only be a couple weeks left. You could choose either of those, or you could just do 1% extrinsic value and keep on rolling month after month until you're satisfied with the downward movement in TLT. But again, we're waiting for these NVIDIA earnings to come out. We're not going to be able to pick a direction or movement until we see the reaction to the NVIDIA earnings. So for now, we keep our portfolio neutral, and maybe we change our minds in the morning after we've seen the movement and the reaction to NVIDIA earnings. What that means is these overnight trades that I talked about yesterday, those are still the ones that are not correlated to the market, the ones that are not correlated to NVIDIA, because NVIDIA has the potential to move the market. So I want to look for trades that are not correlated to tech, semiconductors, AI, and I want to look for trades that are not correlated to the overall markets, especially the QQQ, but the S&P 500 as well. And the way that we've been playing it the last couple of days are these earnings trades. So I showed you PanW a couple of days ago. I showed you Target yesterday. And what happened with Target? Target came down. We said, hey, it might go up because that's the direction Walmart went. But if it gaps down, we didn't expect it to gap down beyond a certain point. And it gapped down quite a bit right here. The low was at 139.98. And we can see what we're on this trade that I put on. We were safe. We weren't going to make it. We were going to lose any money until 142.25, but it recovered, right? So 139.98. So basically 140. Okay, we recovered. We bounced back up. So the range was still very good, and as it stands, it looks like we could potentially be making around somewhere between $1,000 and $1,500 instead of the $500, and against a $2,500 maximum loss if it continues to collapse. So really, this trade looks pretty safe. It expires on Friday, so it only has 2 more days for it to move down over here and create a loss. So these trades are doing very, very well for us. And we're just going to, unfortunately, I can't do these in a single option portfolio, but instead of telling you guys, stay neutral, do nothing for a week or 2 weeks, I want to at least show something and teach something. So in case you do have a portfolio that could do spreads or trade on margin, then you still have something to do during this time period. So these are still looking very good. You could even do one on NVIDIA, but that's really risky because NVIDIA does have the potential to really move beyond even what the market makers expect. And that's happened before. I don't remember exactly which earnings reports. Maybe it was the last one where it surged well beyond what market makers were expecting. And the market makers lost money on that single day. And if we're betting that the market makers were right, then when they're wrong, we would lose money. So NVIDIA is not one that I would try this on, because what was the idea of these trades? The ideas of these trades is, let's remove correlation from the market, and let's remove correlation from the big, huge earnings event. All right. So to go and do the earnings trade on the big, huge earnings event, that would defeat the purpose. So we have to choose earnings on something, the less related, the better. Okay, so let's just do a quick look at what that might have been. So Snow is also in software. It's not entirely specifically related, but it would still be affected quite a bit by QQQ. So ELF would have been a good one to do this on. ELF, ELF Beauty, it's just cosmetics. So not correlated to the NVIDIA or tech sectors. And because it also has earnings reporting, the earnings are going to far outweigh the effect of the market on ELF Beauty. And so just for this one day or a couple of days, we lose correlation with the market as well. So ELF Beauty would have been a good one for this for us to have done an earnings trade on. Okay, so that's all I've got for today, because NVIDIA's earnings have not come out yet, and we'll just leave it here. We'll just see what those results are and talk about it tomorrow morning if I feel well enough. Hopefully I do. Currently, I think I might, but I don't want to make any promises just in case I just feel terrible when I wake up tomorrow morning. So we'll leave it here. Hopefully I'll see you tomorrow morning. If not, I'll see you in the aftermarket tomorrow.